All right, all right. What's up, guys? Matt here, Flex Trades. I hope everybody had a great weekend. I'm going to go over the broad market here in a moment, talk volatility, talk gold, break down gold setup, and go over oil. There's a lot to talk about there, obviously, and I'm going to get to that. But before I get to that, I think it's worth spending a little bit of time just kind of refreshing, reminding, not only for myself, because I think it's extremely important to remind myself of some of the things I'm about to talk about, but obviously for you all too. And that's just the changing of market conditions, right? The type of environment we're in right now. It's not it's not 2020, 2021 anymore, right? The easy money, right? The euphoric markets that we've seen for the better part of 2 years with the injection of all the Fed money, and coupled that with all the new traders in the market, all the, work at home people, all the fresh money in the market, and all the hot sectors, all the hot themes that have run wild through the market over the last couple years, crypto, solar, electric vehicles, among other things, right? It was a truly unique market experience, something that I know I've never had in my 9 years trading. And just talking with people who've traded longer than myself and just, observing and knowing history, we haven't really had anything comparable, really, you could argue, ever, with the advent of, technology and internet and stuff like that. But the closest comparison would be the market of the late 90s, early 2000s, the first real tech bubble. And you saw a few years of just blow off euphoric market conditions before eventually we had a long, drawn out downtrend period. And that took quite some time to digest. And it was several years before the market picked back up and things got hot again. And you're kind of getting the sense of that type of thing taking place now. And broad market, obviously, we're down only nuggets compared to a broad market pullback. I mean, SPY, we hit a 15% pullback. Tech, we hit about a 21% pullback. So there's still potential for more air to be let out. And I know bulls and perma bulls don't like hearing that kind of thing. But in the long run, this type of market choppiness and market digestion is extremely healthy. It's good. It's the ebbs and flows of the market. It's all cyclical in nature. And without this type of thing, you wouldn't be able to experience the type of bull runs that we saw, like we saw last year, right? You can't just go straight up. There needs to be prolonged periods of profit taking and digestion and sideways action, pullback action. So really, this type of environment I welcome with open arms, because on the other side of it is going to come such brilliant opportunity. And I can't tell you when we're going to be on the other side of it, because obviously there's a lot of headlines. There's a lot of things right now taking place in the market. So it's impossible to tell you. It could be by the end of this year. It could be 2 years down the road. It could take 5 years. No one knows. And anybody that's telling you that they know is a liar. It's impossible. It's the ebbs and flows of the market. So I welcome these types of markets with open arms. Obviously, my style of trading is more in line with a bull market where there's hot sectors, hot themes, breakout charts, or strong reversal charts, charts that are breaking multi-month downtrends and starting to put in higher highs and stair step back up and get toward inflection points, et cetera, et cetera. And right now, my style of trading, which yields me my highest profits via swing trades, it's just not that type of environment. So it's been a very slow month plus for myself. And that's not to say that there's not plenty of opportunity, because there's still plenty of opportunity. Trust me. I know there's plenty of traders crushing it right now. But for my style personally, where I make the most money, it's just the conditions aren't ripe. And that's okay, because there's something to learn from every type of market. And for me right now, it's kind of, in and out of things. If I'm green, I need to take profits quicker. That's something that I'm realizing, this isn't a swing trade type of market. So if I'm green in a position, last year or the year before, I would have been more inclined to hold that winning position and let it work for itself. But when you have a choppy market, I'm much more inclined to just take my profit and bail and sit back and wait for some more data to come in. And, it's an adjustment, obviously. And I know everybody just wants to, get rich as quick as possible and have those 6 and 7 figure trades and those huge, trades where you can post and showboat and talk about how brilliant you are. But the reality is that type of market, the ship has kind of sailed on that euphoric broad market that we saw. So sitting back, being patient, waiting for those 5-star swing trade setups, it's going to take much more patience in this type of market. And I'm okay with that. So I guess just the take home message here is adapting and being patient, obviously above all else, but really adapting to the current market and not burning yourself out, not bleeding your account out. And just, remembering that you don't need to trade every single day. You don't need to take every trade that pops up as an idea on your screen. Someone in a chat room's talking about something. You don't need to take the trade, right? So just staying patient and really understanding the type of market that we're in right now. But with that stuff out of the way, I'm gonna hop in here, talk briefly about the broad market because there's not too much more to update on that front. I think I got this screen. Yeah, there we go. So I got SPY here, QQQ Tech. And I outlined last week this little micro channel that we started to develop. So we had this local bottom, huge relative bounce, and then a little micro channel. And you can kind of see that we're breaking out of that micro channel to the downside. I think futures right now, somewhere down in this range here. So what I talked about last Sunday and last Sunday's write-up or video is ideally we get a retest down here on SPY down toward 410, QQQ a retest down toward 320, 315 or so. And, if we can pull back down to 410 and there's clearly still demand, then we can get a nice double bounce and maybe bounce off that and chop a little bit and work our way back up toward 440, 445, right? But I look at something like the volatility index and I think to myself, man, this is a sharp reversal type of chart, right? We've got some distinct higher highs, very distinct higher lows. It's a nice trend. And if we can work our way up toward this 40 mark, up toward even this 40, 45 mark here and break through that area with volatility, you have to expect that there could be a speed up rather of a downward trajectory in the broad markets. So when you go back and you look at kind of those next levels, which I've talked about with something like SPY, if we break down 410, I don't really see much support until about 390. And again, I love, choppy, digestive markets because it creates opportunity. I think it felt kind of like a panic day 2 weeks ago, the night of the first kind of official Russian invasion into Ukraine. And we had the futures gap down big and we had that candle there where we opened at 410. And then we had that couple day, very strong recovery. Days like that, where there's a very palpable sense of fear in the market and you get nice washouts. But I would love something like that. The ideal scenario. I talk about that all the time. The ideal scenario. Ideally, we can have some more of that panic washout down toward 390. The next area that I'm identifying isn't really down until that sub 360 toward 350 range. So I'll just call it here around 355 or so. Again, I'm not here to inject fear into anybody's trading or, I'm not formulating a perma bear bias. I'm very open-minded. I'm very fluid with the way I approach and think. I'm just observing the chart data. But for me, observing this chart data, observing how heavy the market's been over the last month or so, I'm quick to think if we break down through 410 on heavy volume, I don't see where we can't tag this 390 spot. And if we do get a bounce off that 390 spot and we get a little micro channel, little digestion, and then we break out of that to the downside, I don't see why over the next month or two or three, whatever, we can't retest down toward the mid 300s. Excuse me, 360, 350, something in that area. And again, talk about opportunity. That would be a brilliant pullback at that point. Percentage wise from highs, let me drag this here, from highs 480. If we got down toward 350, you're talking about a 26% pullback from highs. All things considered, when you talk about ebbs and flows of the market, that's a decent chunk of a pullback, but it's also natural, and you get these things in the market, right? The COVID, the start of the pandemic from highs, so call it 329 down toward the low of 212, that was a 35% pullback. So 26% pullback would put a decent chunk into a pullback relative to that. Not quite the full-blown 35, 36% pullback, but that would be a nice chunk cut off of broad markets. And that creates a lot of opportunity. So that's kind of where my head's at right now. I'm very patient with things. I'm not in a rush to size into any of these trades or especially swing trades, etc. Get that reload there. And like I talked about last week, the broad market doesn't really interest me until we can get back up toward the mid 440s, 445, 448, something like that. And I'll draw a little box for you guys here. Up in this range, right? I think broad market stays choppy until we can get back up toward this spot here and break through that to the upside. And just the way, futures are trading right now, and with all the headlines and all the crap out there right now, I'm more inclined to think that we're in for another several weeks, if not months, of market choppiness. And, with the volatility index looking the way it does, I'm more inclined to think that there's going to be more selling pressure than there will be buying pressure. And you've seen my levels, and that's kind of where my head is now. But those are the upside targets. Downside target, obviously, through 410. I went over those. But continuing on now into gold, I've kind of been pounding the table on this one for several weeks. The first time I pounded the table was back here late January. I noticed this subtle stair step into this higher high inflection point, that 170 inflection break. And then we had a nice punk, and then it stair stepped back. And then I started pounding the table on this again off of these couple candles here. And on this red day in particular, where my cursor is right around 173, I noted in the chat room, I said, this is a nice pullback. I'm going to now put my risk at, 171, 170, something like that, scale in dips and let the trade work for itself. Well, the rest was kind of history. We had a couple gap days, a couple stair step, and then a big blow off day. I sold myself pretty short. I didn't make nearly as much as I coulda, woulda, shoulda, but I'm also never one to talk about coulda, woulda, shoulda trades. But we had another nice opportunity present itself last week with this high and tight, and I covered that in the chat room, how this high and tight setup here, which I'll annotate in this box. It was just a nice high and tight look, and I made the note, this is still the best setup that the broad market has to offer. And I entered that trade and had a nice follow through on Friday. I trimmed some, I held some over the weekend, and futures are gapping up right now. So plan going forward is just raising that risk as more of like a trailing stop. So my rule of thumb on gap ups is always to trim, take some profits off the table, and then let it ride and kind of just raise my trailing stop accordingly. And so that's kind of my game plan there. But going back on the chart for the last, got to go back 3 years now. I think based off futures, we're probably up in this 186, 187 range, something like that. So big picture, we're getting up toward that breakout spot on GLD. The breakout spots up there are right around 195. There's obviously a distinct possibility that we can go and just, let me refresh that real quick. There's there's always the distinct possibility that we can just kind of blow off this week or within the next 2 weeks, maybe make new highs toward 200, something like that. In that case, I like I say, I want to keep skin in the game. I don't want to sell my whole position, but I do want to trim because, as I was saying 10 minutes ago or so, this is the type of market where if I'm green, if I have a working trade, I want to take profits and I want to lock those profits in. But big picture, now that we've got that multi-year higher high, I want to see a little bit of sideways. And the next time we do see a little bit of sideways, I want to scale in and have a distinct risk in mind. So we're a little ways away from a full thesis on that. So right now, really all there is to talk about is, where the high is on this leg, right? Whether it's 190 or 195, 200, whatever it ends up being, I want to have skin in the game, continue to trim, and then wait patiently for some sideways, right? So that's where my head's at right now. But overall, the trade thesis was there. The trade execution could have been better as far as holding more size. And I think just kind of the broad markets tripped me out of some of my size in this trade. And in hindsight, obviously hindsight being 2020, gold and broad market, they're not correlated because you have a really solid bullish breakout type of chart. And then you look at broad market and it's more top heavy, pullback, choppy. So I just, got in my own head and it is what it is, but still profit, still green on the trade, letting it work. So that's been nice. Continuing on with oil, futures, sizable gap on oil. And I wanted to actually, I have US oil up, but I wanted to pull up the futures contracts rather, because I think that kind of shows a better look. Yeah, here we go. So this is the light crude oil, the futures contracts. So we closed 115, 116 on Friday. I think we gapped up to about 120 or 125, hit 130. Don't know where we are right now, but we're kind of getting to that point where we're blowing off and the potential for a backside, I call it the fade trade. The backside fade trade is probably going to happen within the next few days or week or so. And that's when the short squeeze has run out and the buyers are obviously exhausted. A lot of this at this point is a lot less buyers and much more, in my opinion, much more of a short squeeze situation. And so when that kind of runs out, you get a nice quick pullback. And so that's what I'm eyeing right now. So I'm not really one to short or to get put positions, but sometimes the opportunity is just too good to pass up. And this is starting to become one of those situations. So I would probably trade this on something like USO. I can't give you a number because I don't know, obviously, where we're going to top out. If I did, I would have an infinite money glitch and I probably wouldn't be talking to you guys right now. So anybody that says they know where the top's going to be is lying to you. How I approach something like this is I kind of wait for these shaded black candles typically are good indications of topping candles where you have a gap up at the high of the day and then a close at the low of the day. I forget the exact name of the candle. It's not a gravestone doji. A gravestone doji looks more like an inverse of something like this candle here, but it's kind of the same concept. You have a big range where you open at the top of the range, close at the low of the range, and then typically you'll get a follow through washout over the next day or two. So something like that is what I'm watching. Just an exhaust candle where there was clear blow off type of action and selling pressure the rest of the day. So I'm waiting patiently for something like that. And honestly, there's a chance I pass up on the actual fade trade. And really what I'll be eyeing at that point would be a bounce trade. So it's a little early to talk about, again, where that will be. But, just looking at something like the futures contracts, let's pull this back up. I think pulling back somewhere down toward, 105, 100, somewhere in that range probably start scaling in a position like that. But again, too early to tell. Going back 20 years, I mean, look at this chart. That 115 level was a big spot, and there's really no more resistance on this thing up until all-time highs right around 146, 147. So who the heck knows where the top is? I'm going to be watching close, and obviously I'll share my thoughts within the chat room once I get a little bit more confident that we're starting to get some pressure, and I feel like a pullback's imminent. So be on alert for that type of call out in the chat room. I'll be sure to notify there, but watching it closely. I think we're close to the pullback trade. And with that, we got a couple small caps. My focus on something would be IMPP. Nice setup here into Friday's close, blow off. I think after hours has actually got above $4. So what I'll be looking for tomorrow morning is any type of open and then 15, 30 minutes of consolidation. And then if we go for a high day break, I'll be looking to make a trade into that quick, whether it's 30, 50 cent scalp, something like that. But it's more one of those day trade type of trades where if I can get in and out within 10, 30 minutes, something like that, I'll take my profit and run. Keep my risk pretty tight and not fall in love with it, because obviously if oil does top out and starts to pull back, you're going to see a lot of these small caps lose a lot of their steam very quickly. So head of the snake being oil and the futures contracts of oil, and then the kind of secondary moves that have been happening in small cap world, looking for that trade. But if futures stay strong, then there's more of a possibility that this opens, consolidates a little bit, and then has some follow through. So again, you have to keep a close eye on the head of the snake. And that's about it. I'm not really going to talk about any individual setups. I'm not really interested in any large cap individual names. Normally, I like to break down, Tesla's charts or AMD's chart, NVIDIA, Apple, Amazon, et cetera, but there's just no point of it right now with the market being as choppy as the market is. So I'm focused on broad market, SPY, broad market, tech, QQQ, volatility, and then obviously the main bullish setup right now being gold and oil. And man, have you guys seen like wheat futures and corn futures? Some of those futures those charts are crazy too, but I'm narrowing my focus. This is my focus for now. But anyways, that's going to wrap up the video. I hope everybody has a great start to their week. Remember, always have a risk in mind. Don't over leverage yourself. Don't try to be everywhere at once. Remember to just stay in your lane and focus on the process over the profits. You're not going to make that $1 million trade unless you have a lot of smaller trades leading up into that big trade. You have to work your way there. And I think a lot of people try to get there way too quickly. So process over profits, be patient, let the setups come to you. And that's going to be it, guys. I hope everybody has a great start to the week. I'm out. Peace out, guys.